Morning guys, John here, Mr. Forex Fire. I was up a little bit earlier this morning. I was in quite a bit of pain, to be fair, but hey ho. Had a little look on the Discord channel and seen Joe, who's just started in our community. He's been trading for a while. I've had a chance to talk to him a little bit. He was doing a trade this morning I seen on the odd JPY, so shout out to Joe. I actually had a look at this trade myself, like the setup, and I took it as well based upon this entry, which was more or less where you had it and things like that. And the stop loss, and it was a risk to reward of 1 to 11.8, and it played out really well. So shout out to you, Joe, on this morning's session. Okay, 11.8% growth on my live account. That's fantastic, mate. I like the setup. I like what you were looking at. So again, working upon the smart money and the parameters and things like that, it was a really good trade, mate. Well done. From there, let's set up today. Now we've got that little shout out the way with. Go to EURUSD. I'm just going to get rid of some of the rubber shots on here. Right. So yesterday. Let's take a look. We hit a nice 6.56. I had a family emergency towards the back end that I had to go to be honest. But we still managed to grab 6.56% out of the charts, out of the markets. Let's just get everything set up. I am 5 minutes late, so I do apologize on getting this started. Hopefully the markets haven't moved much, but let's find out. Let's put this down to here. The Euro USD. Again, yesterday we had our parameters here. That was something else I was looking at, to be fair, after the session had finished. So I'll just get rid of that. From there, the bias, we mentioned supply, we mentioned the demand on the lower, supply on the top, we mentioned the orange line, What has happened after the play? Okay, let's just delve deeper. This was our goalposts. Okay, again, higher side, there was nothing met on the orange or the supply on the top, and nothing was met on the bottom. Okay, but we risked 2% on each of these trades. We got a 4% gain at a 2.56. We did a play-by-play structure-wise, incorporated a parallel channel. We had the breakout and then the retest coming back in from the range of the higher high and higher low. It touched in nicely on our area of order block, come down, and in all honesty, this was a 1 to 3. We could have went a little bit longer, but I did have to go towards the end of the session. Now, as the session ended and the trades played out, look at this, guys. We smashed through the target area what I was expecting on my bias. Look at this. This held really well. I did see, if you watch yesterday's session, I was expecting this area to be sort of mitigated to its fullest at some stage. And look at that, guys. Really, really well. Not only that, again, the higher side, you'll see we had the path and the order block here. If we go to the orange and the order block there, absolutely fantastic. It did what our bias was telling us, and I'm pretty happy with how that's played out today. Okay, so what we'll do is we'll just get rid of the lines. It's always good to draw out a general bias on what you're looking at, and it looks as if price is tanked. I'm just going to go on the 1 hour again, take no notice of the hot mess. We can see where we are at the moment. We've come in to mitigate 50% and the nesting area, guys. Look at that. I predicted this back on the 1st of October at the beginning of this month that this area or this wick would hold a significant. I've missed this trade at 8 o'clock. So there's been a good trade to be had from that, to be fair. However, today may be a little bit funny as we're heading into the NFP end of the week. So we've got on the 1 hour, that's an area of supply in the top end. There's nothing on the bottom end from the 1 hour. I'm going to go to the 4 hour. It looks like we're hitting rock bottom on this, to be fair, guys. There we are. Right, so I'm just going to drill into this, and I know we work on the 1. I know we work on the 1 minute, okay, but it's imperative that from a higher time frame we still look at areas of importance, okay? So we've got imbalance there, okay? We've got wick, buying power, the sellers come back in, wick, okay? So we just draw this out, and this is heading down towards, I had this orange line marked out for some other reason on another timeline, to be fair. Let's just get this marked out where we are today, 17th of February 2021. June, August. Right, so there's a hefty on the daily. There's a hefty amount for it to be pushed down. We are still, from a daily aspect, we are still creating these lower highs, lower lows, lower highs, lower lows. But we go at the 15 minutes, okay? Remember, we work upon the 15-minute entity. I just want to knock this in. And again, we've had a shift of momentum again. Let's get a general bias over the course of the last few years. Get the path on the longer term, okay? This. Let's get the shift. Let's get the shift. And I'll definitely have that as the end. From there, just to show you, this is what we call overlaying higher time frame on a shorter time frame. You'll see again, going from what I explained yesterday, this would act as intermediary price. Okay, looks a hot mess at the moment, but don't worry about that. As we go up the time frames, you'll see as the swing points become constricted, you'll see these are worked upon the hour. So what we've got is obviously the 15-minute, but looking at the hour side, we will possibly be looking at 50% on a retracement. Let's take a look from that swing to that swing. I'm just going to put this as the IP here, just so it's going to give us a 50%. It's just above the supply on here. Okay, I'll put this down here. So what I want to do on here, I'm just going to mark a couple of things out as I do. Just going to mark that there. I'm just going to get rid of that. So that's an area that I would possibly be targeting and heading to this morning. From there, any sort of higher areas, again, let's here. Take out liquidity on this higher side. I want to sort of get rid of that. So these are the two areas I'm looking for this morning. Will this crash further down? Most possibly. However, it's mitigated off that part beautifully. 60 so pips on there. I do believe we're going to get the reaction off here. We may get some intermediary stuff, bounce off here. We might come down to here, and then finally we may get the push up to the higher side. but that is questionable, okay, because there's so much price further down here, okay. So I'm going to go down to the 1 minute. We've had our bounce, okay. We've had our bounce off these mitigated area, and you can watch these videos back, guys. I try and do a bias every morning, and again, this is fantastic. I did this on the 1st, seeing that this will be met, and it's just went and done that. You mustn't forget our goal posts this morning. Let's have a look. Right, so we always set this up 8:30 a.m. start, and for me, we do set a parameter of 10:30. However, if I'm happy with what the trading has done for me throughout the day, I would normally finish my trading early, okay. So what we've got here, right, so we need price to show the hands, to be fair. We've got high side. We're coming back into the range, and to be fair, breakout. We've got the lower side. I mean, if there was going to be a continuation down, we've possibly missed an entry. To be fair, you're possibly looking at that going back down towards this. But for me personally, because there's so much gap below here, and there was the only price inefficiency that I could see, based upon obviously in fact, was it the daily, or it was the daily, wasn't it? That was a price inefficiency there, which was the daily. Let's go down to the 4 hour. Okay. Prices around about here at the moment. So it's reacting off this bankers area because this is engulfing. We're down to 1 hour. Is it going to let me take price all that way back? Yeah. Just highlight into here. So again, I'm just going to mark out some areas of importance. Let's take it down to 15 minutes. So let me do a 15 minutes. No, it's not, because the price goes from the 3rd of May. Right, so let's get our focus on. So we've got our nested area being tested at the moment. We've missed possibly a good trade, to be fair. Again, we've got 2 areas of importance on the downside after this. We're down, that's the 15 minutes. Let's go back. I want to go down to 1 minute. I'm going to pause the video, guys, and then I'm going to make myself a nice cup of tea, because I like a cup of tea while I'm trading. Again, this isn't a trade, if I'm honest with you. I'm just waiting for structure to show its hand based upon this high side and possibly these 2 lower sides, to be fair. Okay, let's take a look. Just get rid of that. Well, I'm pretty chuffed with the bias that we're given at the moment. They are respecting, and they are sort of doing what I was expecting going back from last week as well. So just going to pause the video and we will be back in a second or two. Hi guys, let's take a look on here. We've had a breakout of two areas. We'll start looking. I think the euro is pretty weak at the moment, so we could be heading down towards further depths, to be fair. So again, from that aspect, we've had the break of structure. We are now for a short, go from about here, 3 pips. Again, we need for a little bit of a pullback. Okay, we wait for that little bit of a pullback to see where we are. We've got 4 seconds. It's tanking, it's tanking, it's tanking. Starting to pull back a bit now. We need to see what happens with this candle. Is it going to show a green candle? Well, this is where we are, guys. We will risk again 2%. Okay, 2% risk, because at the moment we are 30.4% growth in profits. This is week 4, day 3. Okay, the weeks are based upon a 5-day week, obviously, because of trading. Let's see if we can get in on this trade. Risk 2%. If it loses and it goes out, I ain't fussed, simply because we have a fantastic growth for the month. If this comes in, hey, it's nearly a 7% growth again. At the moment, we do work things on currency strength as well, which is another fantastic thing that we have in our group. From there, we can see that the USD at the moment is strong, and the euro is a little bit weak to a certain extent. They're pretty close together, to be fair, so we might start getting a little bit of consolidation. However, something I want to talk about as well. I woke up this morning, seen in the group that we were talking about, what do you prefer? Do you prefer long trade, which is buy, or do you prefer the short, which is a sell? And people were saying like they like the long or they like the short. And again, it was brought to the attention that obviously you can flip the charts. So let's say you were better at buys than what you were sells, because this is in a sell at the moment. Okay, if you want to flip your chart, which is called inverting, you just go down to the little thing on here, click on that, and you hit invert, and it just flips the chart over, and it'll let you see it from a buying aspect. Okay, if that is your cup of tea, if that's your forte, if that's what you are sort of better at distinguishing your eye to, if you're more able to look at structure and things based upon that, again, you just go onto the sun or the cog, and you just go to invert scale, and you just swap it over. A neat little trick. So I just thought I would bring that to everybody's attention. And again, Joe, I know you were talking about that the early hours of this morning in the chat group, but we are risking 2% at the moment. This is our pullback area. Again, swing point. Let's just mark things up. Let's get things marked up. Text. So we'll start it from around about here. We've got a high. Okay. Got a low. Lower high. And I like to draw these out because it is helping people identify structure. Go here. Low. Just see if I can get this cloned. To be fair, that's better. Low. Low high. lower high. Liquidity was starting to form there, to be fair. Lower high. Lower low. Lower low. So again, going on your structure, there's your channel there. There's a channel there. You can see as you're coming down, okay, high, lower, low, lower, high, lower, low, lower, high, lower, low, lower, high, lower, low, lower, high. We've pushed out and driven out of that. From there and keeping within this area, we could technically change our thought process and use it upon that there. I'm just gonna think out loud here, guys. So if I had this on here, this on here, paste that there. Just gonna get rid of that one. I'm going to base this upon the structure holding on there from the swing down, okay? Again, as we drill in, and the charts will get messy. I'm going to tell you this now. The chart will get messy, but as you're doing this, you're doing a play-by-play structure point, okay? So again, we're doing trend there. And I sort of encourage you to do this sort of stuff, because what's going to happen is it's going to help you identify structure, trends, channels, breaker structures on the liquidity side. Again, we went through this beautifully. We went through this beautifully on the nest, okay? Nesting is order block inside of an order block area. When you get that, it's added confluence that this wood is an area where structure can hold, and it done that to the T. It done it to the pip, more to the point. So again, it's fantastic stuff. Let's just take a look. Order block wise, and it's good just to draw these order blocks up as you're going along. To be fair, it looks as if we're just going to get the euro is just going to be weak today, to be honest. And we're going to head down towards, I do believe we're going to head down towards this today. I do believe we're going to head down towards this today. Let's just get this orange. I do believe we're going to head on to this before we get the push up. But we'll see what happens. We'll see what happens. Going to pause the video, guys. We'll come back in a moment. We've had a breaker structure from out of the channel, another breaker structure outside of the channel. So we may bring our trade entry to here, to be fair. I'm just going to see what that looks like at the moment. We'll just follow the trend. There's a nice risk to reward of 1 to 3. Take a look. We'll get rid of that. Follow the trend down. Get rid of that. That's where we are now. 1 to 3.28. And it's all about drawing your charts, follow the trend, because now we are going, this confirms we are going in that downtrend, because we're going from the channel, we're broken out the channel, it's going to do another drive, okay? So we're going to pause the video, we'll be back in a moment. And again, we are only risking 2%. Doesn't matter if it loses out, because we are heavily in profit of 30.4%. So I'll be back in a moment, guys. Hi guys, so once again, it's imperative that we sort of learn from what we're doing structure wise, just to show you what we've got. We've got we're high, we're lows, we're low highs, low lows, low highs, low lows. We created a channel coming into today's session, okay? From there, we've had a breakout, and we've been slowly taking these order blocks. Okay, so as we've got this as a swing point, okay, this here is also a lower low. This here is a lower high, and I just want to get you guys to do this and practice doing this, so it's helping you sort of do structure. Again, lower low. It's a bit like keeping the stabilizers on a bike, to be fair. It just helps you identify and look at things. So we've got lower high, and because we've created that lower high, again, you could start to sort of see that is an order block at the moment. So we could have that there. If we get the push out, let's just take a look. Let's see, we've got the air. Okay, so let's get this correct. Whoops. Get that back. That's the ear. Okay. Let's say we come down to test this lower area. We may come back up to hit this order block, and we may come back down, and we may sort of do liquidity, if that makes sense. At the moment, this is a liquidity area, so this might hold structure. We may get the bounce down to come back up to come out, but again, we may, in fact, as well, if we get the fire wand out, we may actually come up and bounce off here to then come out. It just depends how this structure holds. Okay, so I suppose what I'm getting at is one or two things. We could come down, hold liquidity, come up to bounce off the order block to come out. Okay, if we did that, again, you're going from the lower high to that liquidity. Your take profit then would be that there. Do the trend line, would be that there. That would be a TP area. Okay, but it all depends. It all depends if this comes, tests liquidity. Okay, if it tests the liquidity, or even breaks a little bit, comes back up to hit this order block and drives out, that's what we could be looking for. And we'll just see what happens with that. Or we could be looking at, because we've had the drive down, we could be anticipating that to then come down to hit this, because at the moment that is holding structure. Okay, so I'm just gonna get rid of that. We'll just see what happens. Again, this is equal to this. Okay, we're going to see what happens. See if this sort of, in fact, what you might see is obviously because it's an ABC. You've got this here, you've got going down. That's your retracement. Okay, that's your retracement. That could be your pull out. And again, let's just do high to this, retracement from that. See what I mean, guys? I mean, just buy about a pip or a pipette, to be fair. Even on that there, in fact, yeah, that is a measurement. The measurement from that, the retracement and the measurement down, it's going to be more or less the same from that there to that there. Okay, and I don't mean to sort of try and confuse you. It's just when you get these waves, they can sort of be in equal parts in equal maneuvers, if that makes sense. I'm just going to get rid of some of the noise. And again, there's nothing much shown at the minute. Just going to get rid of that. Get rid of this. So that's one way of looking at it. Again, every time you break a structure, you're going to get a pullback into more or less 50% of the original pullback, okay? Because that's a swing, okay? You see the swing here, B, and then C. This retraction, albeit being a small one, okay? This here being a small one, watch this. Just see if I can show you some extra source for this. That is a pullback. Pullback up to here. It's more or less come back into 50%. That's the 50% line on that retracement. Just going to get rid of that and come back out. Looks like it's going to start tanking again. As soon as this comes down and it breaks that, I'm going to be using this as the entry area. We just follow the trend, follow the trend, follow the trend until eventually price will come back to mitigate the order block. I'm going to pause the video. We'll be back in a second, but this looks as if it's going to be the next area that we're edging towards. We will soon find out, and we'll take it from there, guys. So pause the video again. All right, so halfway conclusion. We've structurally done our lower lows, lower highs, lower lows, lower highs, coming down into this morning session. We've had a drive out that parallel channel. From there, within the session, we've had two break of structures, okay, because we work upon a break of structure. Unfortunately, one was a big drive. We didn't get the return in. We had another break of structure on the next EURUSD. Unfortunately, it looks as if it's starting to range, if that makes sense, within the structure of this lower high to this lower low. Again, we've made a lower high from here, which is generally around about halfway of the actual structure point itself. It's just over halfway, to be fair. Again, because that's where they normally retain the sort of strength. And we've been ranging within this here, okay? Again, structure-wise, if we do from that lower low to that lower high, you can see it's just a taining structure within there. We're waiting for one of two things. It's either for, let's get this, it's either going to be for our entry and then the TP, or it's going to be the actual breaker structure, and then we're going to be coming up into here, ready to take this order block. Because again, guys, trading does not have to be difficult. It really doesn't have to be difficult. You can make it as easy or as complicated as you want. Trading is about patience. Trading is about mindset. Trading is about being able to control your emotions. Now, while we're at the halfway point, and I have my halftime cup of tea and my little chocolate biscuit as a break, we can have a halftime analysis sort of thing. So, looking to the right of my big fat Geordie head there, you can see the tickers, the London sort of session. Okay, now I'm going to delve a little bit deeper into my process of what it used to be. This here, I used to have all different colors, and I used to have all different manners: Asian, London, New York, London crossover, and I had all different colors. It worked well for me because at the time I worked upon a longer term time, which was 1 hour and 4 hour. Okay, so I used to set alerts and things like that. Now, back in the day, I used to trade with with a platform, and they used to do live sessions. And when they did live sessions, they used tools, softwares, indicators, and there would be all manner of people on a Zoom call. Now, it was good banter, good friendliness and things like that. Now, the issue that I could see, because I always stand back and look at things from a widescreen sort of aspect. And there was many flaws with work on that, to be fair, because you would get in on a trade and set alerts when this crosses this, EMA, when that crosses that, set your alert when our exclusive whatever crosses this or crosses that, get in on the alert. And I used to watch some of these. I would never get heavily involved with it. I used to watch because I was always a longer term, and throughout that trading session, all you would hear was bing, 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 and they would jump on the trade. And because they had so many ducks lined up, so much lined up, they would get in on the trade and they would forget or not understand structure, and they would have to reanalyze stuff. And by the time I did that, bing, 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 there'll be another one go off. So being able to sit on your hands and just be in the mindfulness or the mindset that if I don't get a trade today, I don't get a trade, basically. And this procedure, it works. It might not work for some, but it's working for me, that's for sure. And I'm documenting this. We're heading up into our entry area at the moment. Again, I've got a 30% growth this month since documenting this. So I simply used techniques with smart money aspect, okay? Smart money aspect, where you've got liquidities, swing points, ranges, and I'm just simplistically just saying, right, that's my pair. I can give 2 hours of my time to the charts there. There's my goalposts. When I come onto my session, I look for my goal line sort of thing, which is on the bottom, and I look at my crossbar. So I've got, from the big wide scope, I've condensed into a shorter area, and I look at simplifying the process, not overcomplicating it. For a long time, I wouldn't say it for a long time. When I first started out, I was overcomplicating things for a long time, okay? When you do like this, and a lot of people think, oh, you trade on the 1 minute chart. Oh, it's too quick. I'm commenting as I'm doing my trading, I'm analyzing, and I'm recording. And based within that 2 hour structure, we're now at 9:30. We're into halfway point, as I say, the halftime talk. And we haven't entered a trade yet. But some people will get frustrated with that. Some people will try and chase the price. Some people will look at that right now and think, oh, it's on a support, it's hitting that. Let's get in on the sell. Let's get in on the sell. No, you've got previous structure. You've got a lower high here. Let's see, sit on our hands. Let's just wait, see if it gets to where we want the price to come. Okay, we do not get involved until the price does its movement, and it either does one of two things. It breaks the previous lower high, not this one, but if it breaks this lower high, I would be looking for the entry. If it breaks this lower high, then I would start looking and waiting for another break of structure on another high to make it a higher high. So then I would re-look at the bias that I've set. And again, guys, we wait. It's all about sitting on your hands, doing your trends, doing your breaker structures, just bringing the step ladder down because we're on a downtrend, bringing your order block to the next one, have your line where the swing points come to, have that as your line. When it breaks the structure, the order block above the breaker structure is your entry point. Simple. Never chase the trade. Let the price come to you, okay? That's what it's all about. And again, yes, I'm risking 2%. If it loses, will I get upset? A little bit. But we step back, look at the bigger picture. What have we got for the month? You just simply look on what you've been analyzing yourself on. What have we got for the month? Well, let's just take a look. Oh, I've got a growth of 30.4%. I'm only 2% down for today. I've still got 28% growth for the month. I'm doing fantastically well. Why has this hit the stop loss? let's reanalyze from the structured play out of what we've done on the play-by-play going into today's session and try and understand why there has been a change of direction or a change of trend. And again, it looks as if we may even just here miss out by a pip. Not even that. Let's just go into the field of play. This looks like it's going to make its play. It's less than half a pip. If this comes down, hits that, and breaks structure, we then use this as the order block. We just simply move with the trend. Again, would I be upset that if I missed this by a pip or so? No, not really, because I just wait for the next swing. Okay, I hope that makes sense. I'm going to pause the video for now. I'm going to have a little bit of a cup of tea, chocolate biscuit. We'll be back in a moment. Hi guys, so what I want to do, we'll just talk a little bit more about analyzing and things like that. Okay, let's take a look. Let's delve a little bit deeper, a little bit more deep dive analysis. Right, so in here, as I've got, I mean, obviously a trained eye, we come down to here, up to here, down to here. We can see we've got a harmonic pattern. Okay, now this is a bit more advanced and things like that. You come accustomed to seeing things like this, but as we are looking, okay, and again we speak about imbalance and things like that within that harmonic pattern. Okay, I'm just going to show you some powerful stuff. So the body to the wick has been buying power within that. Okay, spread this out. See how it's come in, it's mitigated lovely, and it's bounced back out before the continuation. So again, it shows that imbalance areas and target areas like this are vital to price action and things like that. I mean, if we scroll back out within that as well, we've got, again, wick down to most certainly there. We might have price come back up and sort of come in and mitigate off here. So we've come down, we've come in, we get it bounce down off here, and then we could most certainly get the push down and take liquidity from here, which is a possible move. We'll wait and see. Again, from here, let's get this, the cog, imbalance, and it's not until you go more in depth with things, to be fair, that you'll start seeing things like this. Again, it may not play out. That may just drive straight out, take the liquidity. But if it does, I would just simply look at the swing point, take this order block here and use it as my new area of interest, ready for the retrace back in and then the continuation. But we'll see what happens. We'll see what happens with this, see how it plays. I'm going to pause the video and we'll keep coming in and do a little bit deeper dive analysis with this, because again, it's not always about just saying that's broke structure, that's where I'm heading, that's my entry, that's my stop loss, that's the TP. I want to try and be able to get my thought process across to you guys and hopefully let you take notes on what I do. And again, I see this on a day-to-day basis. If I mention a terminology and you sort of have that light bulb moment on that, you just need to pause the video right now. Obviously, you have this down as the 6th of October on your notes. Write down the word imbalance if that's sort of, again, if it's resonated with you, timestamp it, highlight it, and then when you want to go back and learn upon these sort of structure points, you can go back on these timelines, and we've had a break of structure there now. So this just invalidates all of what we've been doing here. I'm going to get rid of this, get rid of this, just get rid of the noise. So swing point, I want to bring this down to here. this as the area. This here. And again, we're going to continue to risk 2%. Get rid of this. That's been invalidated. Let's just break a structure. And now we have a new TP. A 1 to 3.2. 1 to 3. See, we get the return back into there and back down to that. Again, we're just moving. We're just moving again. The liquidity was held here for short term. And then there was a break of structure. So we've now got a lower. We had a break of structure here at some stage, okay? So this here, in fairness, is actually a high. It's a high point from here. Let's see what happens. We'll pause the video, and I do hope you're taking something away from this with regards to learning structure points. Okay, let's get rid of that. Get rid of you. And we are slowly, surely heading towards the bottom end bias for today. Again, how much longer is this going to do this? We may head back into the channel. We've got a nice order block here, and the order block on the higher side. Let's have a look up on here. Okay, it's 50% of that order block, but also it's the order block that's created that's slightly higher than what this area is. We might get an X box a spot. Again, I could go into so much with regards to things like this, the channel, that there. We might get the entry point hit off that. We'll just mark that up and just see how important this median line is on the channel. Again, we may get a break of structure, but we would wait for the price to drop a little bit further, to be fair. There's a break there. I'm just going to bring this further down, because when I get a retracement, I want to see lots of price, lots of action. I don't just want to see two little candles. I want to be able to see quite a bit of movement, to be fair. So I'm just going to move this down to 1 to 352 now. See if we get that price move back up. Looks like it's going to drive back out. We'll pause the video and we'll be back in a second. Hi guys, so far we've got a new order block here. Let's have a look on there. From there, short, Henry, to there. Just gonna get rid of this. We'll see if this comes in. Again, it's a 1 to 5 because you've had a break of structure there. Okay. That there's become a break of structure. Again, you've got a new point right there. The price is starting to peter out. We've got a 2% risk. We're following the trend down. We're going to get around about a 3% gain when we look at this from a structure point. Are we going to get it? Push, push, push. Let's see if we get that push down. We need that push down. a nice just under 3%. Let's see if we can get that. Liquidity is residing right there for now. That's where liquidity is. This is slowly heading back into the thing there. There we go. There we go. Is that it? Yes. Yeah, you see there? That has hit. So there we go. There, it's wicked out there now. So we have got a nice trade there. Fantastic stuff. Fantastic stuff. We have hit a 2% risk to gain. Let's have a look. Blah, 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 blah. $1.45 times the 2% risk, 2.9. Fantastic. Risk 2%. We've gained 2.9% win. Need to get this a little bit bigger. In and out, just like that. And this is the power. Stop the share. This is the power of trading the trend, okay? We've just gained just under 3%, bosh, like that. We be patient. We are just letting the trade come to our areas. We understand the swing points, the structure, the highs, the lows. We do not rush into a trade. And we've just gained under 3% growth. In and out like that. Now, let's just change gear and have a look at where we are as a bigger picture. If you are in on a challenge at the moment, and I've just taken that trade, okay, I've just done that trade, and I'm just doing this as a documentation at the moment. Now, if I had my parameter set up and I got in on the trade and I was doing it on the live sort of thing, 3%, done that within a minute. Seeing the structure point, let's just go back and get this. We'll just get you into the mindset of what we're doing with this. Okay, let's have a look. So we've been following the order blocks on the way. Okay, I seen there was a break of structure of liquidity here. Okay, wasn't much. Seen there was a break of liquidity here, right? Looked at the previous swing point. Okay, I looked at the previous swing point, which is this here. Excuse me. Which is this here, and realized that that's the order block. We've had to push out the break of structure. That's my entry. That's my entry. This is where we had the break of structure. That's the area I'm wanting this price to go to. Risking 2%, so 1.45. Bish, bash, bosh, in and out. 2.9% gain. Now, these challenges, the funded challenges and things like that, they 8%, 10%. Second stage process, the one 4% or 5%. Following a process, following the procedure, in and out within a minute, 3% gain for you. And I've not done any over trading. And again, this bit is imperative as well. A lot of people get scared when they see this, risking 2%. This is a proven method. You only have to watch what I've been doing over the last 3 weeks, 3 days, 30-odd%. Okay, we've got 2.9% there now as it is, right? So let's just update this live in front of you now. So we had 6.65 growth yesterday. This one is a 2.9. Okay, let's take a look. So far, 2.9%. Okay, at 2.9%. Let's just get the calculator. 30.4 plus 2.9. We are now on 33.3%. That's going to change because we are on what, 5, 10, 15, 16, 17, 18 days. This is 18 days divided by 18. That's a growth of 1.85% a day. You don't even get that off your bank in a year. You know, that's in a day-to-day basis on your balance. Fantastic stuff. Again, guys, I don't make this stuff up. I'm doing it in front of your eyes. It's a structured approach, okay? A lot of people get put off when they see the 1 minute, chart, basically, okay? And what I've done, I've structured this out. I've got the goalposts, I've got my swing points, and I've followed the trend. Look at my currency strength, which is part of the stuff that we do inside of this great community. Andy's brought that to our attention, and it works really well. I understood today the euro was weak. There was going to be a downturn on this. So I knew I just needed to follow structure. Following that structure of the euro being weak means we've got a channel in a downtrend. Each time we have that break of structure, I'm waiting for price to come to my entry. I'm not waiting for me to think, yes, it's weak, let's just get in on an entry. I want price to come to the entry of the previous high order block, because price will retrace at some stage to a certain area, and that certain area will always be the previous swing point, thus being the lower highs. Okay, we missed out on around about 3 trades today, but coming towards the end of the session, we've hit it in and out within a minute. Fantastic stuff. 3% made again. Just to look at it, because it's always good to finish on a high. I'm going to end the session here at the moment, but we're going to have a conclusion in a chat in a moment. 33.3% growth. Okay, we've got 2 more days left of trading for our documented proof, not just on the Excel sheet, documented proof via me doing this live in front of you. And I hope you're seeing value with it. 33.3%, 1.85% growth. Like I say, whatever bank balance you have at the moment, your bank will possibly not even give you that in a year. Whatever balance you sort of trade with, whether you're with a prop firm, if I could get you a 1.85% growth every day on, let's say, a 25,000 account, 100,000 account, would that be worth it? Damn well would it, you know? So again, guys, fantastic stuff. Going back to the chart, the analysis and bias, I do believe we're going to be coming down into here at some stage. We'll see if that hits going into tomorrow's session. It may be later on in the afternoon when that hits, but we've got a nice 2.9% there. I'm not going to risk any more. I'm happy with the 3% growth or thereabouts. Stop the share and just have a quick chat with you. So for the guys that watch from afar, okay, I've been trading for now over 4 years. I was a full-time worker. I worked as a sales executive. My first year of trading was really hard. Just to give you back reference on what I was doing, my trading was really hard, albeit I was enjoying the process. I started to see a little bit of consistency. I was part of a group and a community back in the day where they were trading their thing with scalping, but the way they were trading scalping, it just didn't sit right for me. Wasn't in my lifestyle, should we say, okay? From there, I was a long-term trader. Now, when I was trading long-term, I was getting success with that really, really well. And so I started doing trade ideas, not signals. We call them trade ideas for the group. And I was catching many pips on a week-to-week basis. And we documented that. And from that, I actually came up with strategies in that group as well, which was like obviously attained from a platform I was with. And I restructured that to work within the parameters and part of a tool that was with that setup. From there, my job sort of getting got busier and busier, I wasn't able to attain and be able to do what I loved, which was give the value of those trade ideas into the group. Slowly, I sort of was not sort of pushed away sort of thing. It was just other things took preference within the group, which was fair enough. From there, I then fell in love with smart money. Okay, smart money was working fantastic for me. Did many sort of FTMO trials, seen it was working for me. But then I had a light bulb moment not long ago, which was the concept of what we have here today. And I seen the buildup of things like liquidity, order blocks, everything that I've learned over the 4 years. I thought I could structure this to now work for me. Because when it comes to trading, it's not about seeing something that works for this, and this. It's about what's going to work for you and the lifestyle you have to be able to trade. So then I sort of went away and thought myself, well, if I bring in the concept of the smart money, but people these days like to be in and out on trades, and they want to be able to do scalping, and not so much the idea of make quick money, because that's not what it's about. Okay, you have to stay structured and safe overall. So I thought if I could bring the idea of that smart money into the concept of the scalping, okay, which is why we have the order blocks and levels and things like that. But not only that, could I help the average person with the mindset of not over trading, not becoming greedy? And that was my next sort of goal. So this preference, what I mean, I've been doing it for a while now, and it works and it works. I've always been a little bit skeptical about showing people what to do with it, simply because it's the greed factor, people chasing money, people chasing price and things like that, and entries. And again, I go heavily, and I've said it there this morning, it's not about getting in on entries, it's about understanding structure. So the purpose of the conclusion, or the end conclusion where we're coming to at the moment, the crescendo, is that I've been doing this for the last 3.5 weeks, okay? And each session, as the sessions have gone on, I've added a little bit more within the analysis, my thought process, my idea, and how I look at structure. And I've been drawing that onto the chart live as we've been going. And again, 1 minute scalping, a lot of people get put off with it. 1 minute scalping will only be hard if you're chasing that price. That's where I came up with the concept of, yes, the 1 minute can be emotional, can be quick and fast. However, do I look stressed to you showing you and trading this on the chart like what I've been doing today? No, simply because I'm saying, right, I'm not going to be distracted from the hours of 8:30 till 10:30. Okay. Yesterday, yes, because we had a family emergency, but generally 8:30 till 10:30 is my working day. It's me in front of the chart. It's me being there to trade for them hours. That's my work. That's my work routine. 2 hours session. And then from there, I draw a bias. So that's my step one. I draw a working bias where I'm expecting price to go based upon supply area and demand areas. Okay, which is, there's more about that in here. And then from that, I will then go down to the 1 minute and sort of look at structure. I will have a look at what we call the currency strengths, again, which is another phenomenal thing we do inside the group here. So a shout out to Andy as well. Okay, it's absolutely fantastic and it's working well within this stuff. Shout out to Andy. And I based that this morning. We spoke about it. The euro was weak, and we just basically drew our channel where there was the downtrend, realized that's where we were going to go. But as each swing point, A, B, C, each time the C point was broken, we shifted the order block from the top to the retracement area of the AB. Okay, the AB is always the retracement area. So then your order block always resides on the B. When price comes down and breaks the C, which is the breaker structure, you then got a new ABC. You bring it down to the next B order block. And I'm sure if you watch this video back, timestamp it, take notes, and draw and practice this out as well, you'll be able to keep a clear mind, a clear mindset, and not chase price. You let price come to you overall, okay? So if you want to get access to what we have inside of here, there's so much more, okay? One of two things you can do. On the YouTube video you're watching right now, there is underneath the video that's playing here, you'll see a button that says join. Click on that, hit that, become a Spark or a Fire member, okay? From there, drop a comment on the video and just tell me you've become a member. I'll get you access to get inside of this video straight away, and we will help you, okay? I've been part of programs and communities and other things where they've been so highly priced, where they're getting you in to use the tools, the softwares, the indicators. There's nothing wrong with that, I suppose. But in hindsight, if you're coming in and you can't afford the sort of membership on those levels, and you're buying into that straight away, then you're going to struggle straight away, simply because you're having to cover the cost of that membership for them platforms, but at the same time, you're stressing yourself and trying to live trade from the offset to try and be profitable at the same time without having a clear mind to do what you would do, needing to do in the first place, which is learn to trade. You're just jumping in with 2 feet, thinking that the tools that they're providing you is going to give you the secret to their success and make you rich. And it's all cloak and dagger. It's all complete utter nonsense. It's all complete bullshit. You need to do the learning process. You need to go through the emotions, okay? You need to surround yourself with people that can keep you accountable and push you and drive you on. And that's what we have in here. There's no high-end sort of hidden agenda with get this and you pay for these tools. I don't do that. I base myself in my trading criteria on price action, price structure, and again, just keep myself simple to the two-hour session a day. So that's been my thoughts at the end of this session. I hope you are enjoying the stuff I'm putting out there. Again, as time goes on, I'm eventually going to make these videos members only. But again, it is a paid thing. It's not $200, $300 or whatever dollars a month. You only have to cover the cost of a cup of coffee. Come in as a Spark member, it'll be $2.99, you know. So again, what's $2.99 over $299? $2.99 a month supports me, supports the channel, supports the content that I'm putting out there, and it drives me to give you a little bit more. So if you are seeing value in what we're doing, whether you're already in the Discord or whether you want to come into the Discord, show your support, drop a donation that's on the channel that's inside the Discord. If you're there, drop a donation just to show that you're getting the value. I'll give you a shout out. And if you're watching from outside of the Discord and you're watching on YouTube, again, underneath the video that's playing right now, there'll be the join. Come in. You only have to come in as low as $2.99 a month. That's all. Supports the channel, supports me. I'll give you the support on doing what I'm doing right here on a day-to-day basis. Okay, guys? My name's been John Docherty, Mr. Forex Fire, and thank you very much.